Sir Isaac Newton, the genius who unlocked the laws of gravity, once admitted, "I can calculate the motion of heavenly bodies, but not the madness of people." That single line captures the heart of one of history's greatest financial disasters, the South Sea Bubble. This isn't a story of science, but of greed, hope, and delusion. In the early 1700s, as science revealed the universe's secrets, the mysteries of human behavior remained unsolved. Newton himself would be swept up in a financial mania, not by gravity, but by the irresistible pull of speculation. The South Sea Bubble is more than a historical event. It's a timeless lesson in human psychology. It shows how a promise of easy riches can infect a nation, how collective belief can create and destroy enormous value overnight. We'll travel back to London, 1720, to witness the birth, rise, and collapse of a financial dream. This story is a map of a bubble, a compelling story, the promise of new markets, powerful backers, and the intoxicating sense that everyone is getting rich. These ingredients have fueled bubbles from tulip mania to dot-com stocks. By understanding the South Sea Bubble, we can spot the patterns that still shape our financial world. Perhaps we can even recognize the madness before it consumes us. The South Sea Bubble is a cautionary tale written in the language of money, but its message is about us. It's about the power of stories, the danger of crowds, and the limits of even the brightest minds. Let's begin our journey into the madness of crowds and see what lessons history has left for us. Early 1700s, Britain was powerful, but drowning in debt from endless wars. The government's interest payments threatened national stability. Enter John Blunt, director of the South Sea Company, a company with a grand name and even grander ambitions. Officially, it was meant to trade with Spanish South America, a land rumored to overflow with gold and silver. But Blunt saw opportunity in the government's debt. The company proposed a bold plan to take over the entire national debt. Investors would swap their risky government bonds for shares in the South Sea Company. The government would pay interest to just one entity at a lower rate. For the government, it was a lifeline. For the company, a path to power and profit. Parliament, lured by promises and bribes, pushed the deal through. The public was told they were securing Britain's future and offered a stake in the company's supposed South American riches. It sounded too good to be true, and for a while it was. The stage was set for a financial revolution, but beneath the surface, a dangerous game was beginning. The South Sea Bubble was about to inflate. The South Sea Company's real business wasn't trade, it was selling a dream. The promised riches from South America were mostly fantasy. Spain allowed only one British ship per year. There were no shiploads of gold, just rumors and hype. The company's directors mastered the art of selling hope. Newspapers paid by the company spread tales of endless wealth. The story was simple: buy shares, get rich. People didn't need to see the gold, they just needed to believe. The company's value soared not on profits, but on public expectation. To fuel the frenzy, the company let people swap government debt for shares and even lent them money to buy more. This credit-fueled buying pushed prices ever higher. As shares rose, more people rushed in, convinced the story was true. The company became a self-sustaining machine built on hype, credit, and the desire to join the winning side. The higher the price, the greater the excitement. The South Sea Company had created a financial mania. The dream of easy wealth was spreading fast. London was about to lose itself in speculation. The bubble was ready to burst. In 1720, London caught South Sea fever. Share prices exploded from £128 to over £1,000 in just months. Everyone wanted in. Aristocrats, merchants, even servants scraped together savings to buy shares. Exchange Alley became a frenzy of shouting deals and dreams of instant wealth. The mania spread beyond the South Sea Company. Hundreds of wild schemes appeared, some for perpetual motion or unknown undertakings. People threw money at anything, convinced every new company was a path to riches. The nation lost its collective mind. Even Isaac Newton joined in. He bought early, sold for a profit, but couldn't resist jumping back in at the peak. The pull of the crowd was too strong, even for the world's greatest scientist. Fortunes were made overnight. But the higher the shares climbed, the more fragile the dream became. The bubble was stretched to its limit. The excitement masked a dangerous reality. The entire country was gambling on a fantasy, and soon the reckoning would come. The madness of crowds had reached its peak. The fall was inevitable. Every bubble bursts, and the South Sea bubble was no exception. In late summer 1720, the company's own directors began quietly selling their shares. Rumors spread, confidence cracked, and panic set in. A few investors sold, prices dipped, and fear took hold. The rush to buy turned into a stampede to sell. Share prices collapsed from over £1,000 to just £150 in weeks. Fortunes vanished overnight. Those who bought on credit were ruined, still owing money for worthless shares. Exchange alleys' cheers turned to tears. Banks failed, businesses closed, and trust in the financial system evaporated. Isaac Newton lost a fortune, millions in today's money. He could never bear to hear the words South Sea again. The great national party was over. The hangover was brutal, thousands were ruined, and the economy ground to a halt. The South Sea bubble had burst, leaving devastation in its wake. The dream of easy wealth had turned to dust. When the dust settled, Britain was left with ruin and rage. The public demanded justice. Someone had to pay. Parliament launched an investigation, uncovering bribery, insider trading, and fake stock. Company directors had manipulated the market and lined their own pockets. Their assets were seized, some were imprisoned, and the Chancellor of the Exchequer was expelled from Parliament. But for most investors, the money was gone forever. Robert Walpole stepped in to restore order, restructure the company, and stabilize the economy. His leadership calmed the crisis and cemented his power for decades. The South Sea bubble didn't just destroy fortunes, it reshaped British politics. The scandal left a permanent scar on the nation's financial system. The lesson was clear: unchecked greed and speculation could bring down even the mightiest. The aftermath was a warning for generations to come. The madness of crowds had left its mark. The South Sea bubble is a masterclass in financial speculation. It starts with a plausible story amplified by hype and easy credit. People borrow, prices rise, and the fear of missing out takes over. The crowd's psychology drives the mania until reality intrudes. The company's clever financial engineering was built on lies, not real value. When belief faltered, the collapse was swift and brutal. This pattern repeats. From tulip mania to dot-com stocks to the 2008 crisis. Even the smartest minds, like Newton, aren't immune to the emotional pull of a bubble. Intelligence is no defense against the madness of crowds. Markets are driven by hope, greed, and fear, forces unchanged for centuries. New technologies and markets will always create new bubbles. The South Sea bubble is a permanent reminder. Even the brightest can be fooled. The real lesson is human. About the power of stories, the danger of crowds, and the limits of reason. History's warning is clear. Beware the madness and remember the bubble. The next one may already be forming.